So our next lecture video for chapter 23 is called the Profit Center. So remember, there's only three in this chapter: Cost Center, Profit Center, and Investment Center. And for this accounting profit center, we're going to be looking at both revenues and costs. Therefore, we're looking at talking about profits. So we have to remember that we're focused on revenue, expenses, and income from operations. And when we look at responsibility accounting and profit centers, we're talking about things called controllable revenues, controllable expenses. The reason we use the word controllable is because these are actually can be controlled by the manager. The manager can make the decisions. And all of my lectures for accounting part 1B, or accounting part 2 is what I call it, is all about managerial accounting. You as a manager, what decisions do you actually make that can affect your revenue, your expenses, or your income from operations? So when we look at profit centers, we have to look at something called service department charges, because often I'll have a particular department, such as research or development or legal, giving services to multiple locations within my business. And so these are called service departments, and we have to learn how to deal with what we call service department charges. So here are some examples of service departments: research and development, legal, telecommunications, purchasing, advertising, payroll. These are all examples of service department charges. And think of these as indirect expenses to a profit center, because one service department services multiple departments within a corporation. And so a profit center manager can actually control the service department expenses if I want to, and I can do it based upon certain things. And we're going to talk about how do I know how to allocate these charges to different departments within my company. So we're going to talk about how do I allocate my service department charges. So we're going to be looking at a company called Nova Entertainment Group. We're an entertainment company. We have two operating divisions. One's called the theme park division, and one is called a movie production division. And here are my revenues for each division and my operating expenses. And the operating expenses are what we call direct expenses. So direct expenses are wages and salaries, most of the employees. But we're going to look at service department charges, which are indirect expenses. So here we go. Here are my three service departments. I have purchasing, I have payroll, and I have legal. And these are the costs that these departments have incurred during the whole year. And so what I'm going to do is look at how do I allocate this $400,000 of purchasing to each of my two different divisions. So here's what we do. We have to have an activity base. And I don't know if you remember activity base, we learned way back early in chapter 16. In 16, we have an activity base. This is some way that we can gauge or measure the services given. So for example, purchasing, the activity base would be the number of purchase requisitions or number of purchase orders. Payroll would be the number of payroll checks. Legal, the number of billed hours. So you have to know what the activity base will be for each of the service department charges. And if I believe correctly, one of your homework problems is understanding what the activity bases are. So here's an example of my activity bases. Remember, I have the two different divisions here. And for purchasing, this division has 25,000, whereas this division only has 15,000 purchase orders. But the total is 40,000 purchase orders for the purchasing department. Payroll checks, I add up my total for each division. And here's legal, it's billed hours. And so what we're going to do on the next slide is we're going to take this information here, the total usage associated with the total cost, and we're going to have a formula. So write this formula down. This is how to calculate the service department charge rate. It's the actual expense for the whole year for each service department divided by the total usage for the service department. So for example, purchasing, the total was $400,000 for the year, divided by the 40,000 purchase orders. So that means that every time a purchase order is issued, it costs that department or that division $10. Here in my payroll, this is the total payroll cost for the year divided by the total paychecks issued for the year. So every payroll check cost me $17. And here's my legal down here. So now that I know the rates, these are called the rates, service department rates. I'm going to take these rates and apply them to the usage for each division. And here's what I'm doing. I'm going to take the usage for the service department times the rate to find out how to allocate the total service department charges to the different divisions. So here's an example. Now here are my two different divisions, my theme park and my movie. So purchasing, $250,000 will be allocated. But if I look down here, it's because remember I have a $10 rate, and the theme park division issued 25,000 purchase requisitions. So that's how I get these numbers. I take the quantity of purchase requisitions times the rate and apply it to each division. Payroll checks, remember it was $17 per check. This is each division and how many checks they did, multiply it, and here's my payroll. And finally, my legals down here, the same thing. So notice, this is a total of service department charges for theme park. Here's my movie production division. So this is how I'm going to break out my service department charges to the different divisions. Again, I'm still looking at profit, which is revenue and expenses. I still should be always comparing to the budget. But I should not compare it to other profit centers because my other profit centers are often a little bit different. And so here's an example of me comparing information. Here is a divisional income statement. It's just for each division. I'll have one for this division, for the theme park, and I'll have one for movie production. So theme park, here's my revenues. Here's my operating expenses. Minus that equals my income from operations before service departments. Now I'm going to take the service department charges I just calculated and subtract it to get my total income from operations. So I shouldn't be comparing here or even here, but I'm really doing it up and down. Now I'm able to do my revenues minus my operating expenses, which is like my cost of goods sold or my cost of manufacture sold. That equals my income from operations before service department charges. Then I subtract that to get my income from operations. So this concludes our profit center accounting concept.